So now let's set up a futures workbook. To start, we go to Chart, Bar Chart, and go over to this category here, Commodities, US Commodities. And what we'll do is start with a single chart and create a template. And this time let's create 2 charts on one page. And since cocoa is at the top of the list here, let's go with cocoa. So let's start with a weekly chart of cocoa. All right. And this control panel here, you can open it and close it with this little button here. So there we have a weekly chart of cocoa. We're going to create a template for our futures here. So let's do a second chart on this page. This one's weekly. Let's add a daily. So we right click and we go over here to new chart. And once again, we go to cocoa, but this time we're going to make it a daily chart. So there's daily. Double click cocoa, and there you have 2 charts. Weekly on the left, daily on the right. Remember, we want to add volume, so we can go to Tools, Volume, and we can add volume to the bottom of the weekly. Let's reduce the size of this down here. Turn the crosshair on and off with this thing. And then over here, let's add volume to this one. Now, I'll give you a little tip here. You can add the volume. If you highlight volume here, just left click anywhere in the volume window so it's highlighted. And then if you right click volume, you can go to this actions menu and you can say add tool to toolbar. So you click add tool to toolbar. You can type in the name of the tool and you can choose whatever little icon that you wish for that. So we're going to add volume to the toolbar, save that. Now if you look up here at the toolbar, it says volume. So next time that you want to add volume to a chart, for an example, the one on the right hand side here, you can just simply click volume and there you got it down here. The other thing that we could look at changing here in regard to the daily chart is changing the time scaling from trading days to calendar days. And to do that, to change from trading days is typically what's displayed on the chart, 5 bars for every week with no gap for the weekend. So if you look at this chart here, we can see that the bars are all squished up against each other with no gaps for the weekends. Now, if we want to change that to calendar days, we can right click and go to calendar days under chart properties and click that. Now at close, you can see that there's gaps here where the weekends are. Now you might think, well, why would we want to do this? As we go on in the course, you'll realize the significance and importance of having a proper time scale. Because remember, when we do our analysis, we're looking at 2 dimensions of price and time. And as W.D. Gann stressed, that time is one of the most important things that we can look at in regard to our analysis. So why is it important for us to display calendar days versus trading days? Well, it has to do with the way that we as humans think about time. When we finish trading on Friday and we go about our business of domestic duties on the weekend or socializing and whatever you do on the weekend, do you suddenly stop thinking about trading on the weekends? Of course not. We're always thinking about things in our lives, whether it be trading or spouse or kids, family, etc. So because time does not stop on the weekends, it keeps going, For that reason, psychologically, our brains will keep on thinking about trading, and we might even be making trading decisions on the weekend. We might pore over our charts if we have some time. We want to look at our charts on the weekend, and we review the previous week's activity, and we might make a trading decision on a Sunday or a Saturday. That's when those trades actually take place, is in our minds, and then they manifest themselves on the Monday on the open, and that's why there's more volume on the Monday, and the volatility that goes along with it is because we now have all that trading, all those decisions that have been made on the weekend are manifested in that trading session on Monday. So that's why it's important for us to use calendar days versus trading days on our daily chart. Of course, on the weekly chart, it doesn't matter, but on the daily it does. So that's what we'll do. So now it's time for us to save this page as a template. So make sure that we have the chart sized the way that we want. So here we can make the daily a little bit better. This is our focus. So if this is the way that you'd like to save it, great. Now, go to Save Pages Template. And we're going to create a new one here. We'll call it GTC 1. Okay, so we save this page as a template. Now we're good to go with the rest of our pages that we want to open up in our workspace for commodities. So let's go ahead and close this page or close this workbook. No, I don't want to save it. Let's create a new workbook. And to do that, we'll go to Chart, Bar Chart, click Cocoa at the top. Under Commodities, click the first product, which is cocoa. Go to the bottom of the list and hold down the Shift button. Press the left button on your mouse. Now you can see that all the products are highlighted. Right-click anywhere here and then say Open All Selected Codes. Okay, so now you can see that they're all open across the top there. That was pretty quick, which is nice. And once again, we have the strength, the bar coloring on the chart, not the way that we prefer. So what we do is go and apply a template to this workbook. So we go over here and say Apply Template to Workbook and use our new template of GTC1. Click that. And look at that. We got cocoa, coffee, copper. So all our different commodities are there. So now let's go ahead and save this workbook. Save this workbook as, we'll just put commodities. Save that. And we're good. So we can close that up, close the workbook. And if you ever want to open it up again, here's the recent workbooks. You can either open it here under Open Workbook or go here, Recent Workbook, and it opens up for you there. Opens up the last chart that was displayed. So there's a number of different ways that we can scroll through these pages. You can use this arrow over here. And also, you have a drop-down list here. And finally, you can search according to symbol over here. We type SB for sugar and click that. And there's your sugar. Okay, so that's how we save our commodity workspace. Now let's move on to FOREX. To create a FOREX workbook, go to New, Chart, Bar Chart, and look for the foreign exchange category under exchanges. So if we expand that, we can see all the different currencies here. Now there's a lot of cross-currency rates, so many pairs here. A lot of us are not going to be trading these instruments. So with that in mind, what you need to do is go into each one and select which ones you want to add to your workbook. So for an example, let's go over here to US dollar. Let's choose currency pairs with US dollar as the base. And for an example, here's Canadian dollar. I just left click Canadian dollar. And let's scroll down and choose some other ones where the US dollar is the base, like dollar yen here. What you need to do is hold down the control button and left click that symbol. And now you can see that both the yen and the Canadian dollar Canada are highlighted. Okay, so we're going to go through the list here for these major pairs with the US dollar as the base and select them. Let's scroll down here. Here's another one, Swiss franc, dollar Swiss. Hold down the control key, left click, boom. And so there's another one. So once you have, there's 3 symbols there. 1, 2, 3. All we need to do is once again right click on one of the highlighted symbols, open all selected codes, and there you have it. Once again, we can use our template to open up a daily and a weekly, and so let's go over here. Apply template to workbook, GTC1, and we apply that to the symbols there. Okay, so as we know, spot Forex, there's no centralized exchange, so the volume is not available like it is on the exchanges. So we really don't need volume. So maybe what we should do is create a template that is for Forex only. So let's do that. Let's go over here and get rid of the volume. Highlight the volume here and delete it. And highlight the volume here. Delete that volume. Okay, so now we just have a daily and a weekly in Forex. So we can save that as a template. Save page as template. We'll call this GTC Forex. So we're not including the volume here. So save that. Okay, and now we can apply that template to this workbook, GTC Forex. Okay, so it's applied to all 3 of those symbols. So let's check this dollar yen. You can see that, yes, there's no volume there any longer. Okay, dollar Swiss, same thing. If you want to add some more symbols, you go to chart, bar chart, and once again, you just go over to whatever currency that you're looking for here. So let's say Australian dollar US, I want to add that. So double click that. What else we got? Let's look at, go down here, euro dollar. We want to see that on there. So we go euro US, double click that. I can hit the F3 button instead of going up there. And then euro pound dollar, we want to do that one too. Pound US, double click. There's that. F3, New Zealand, let's do that one. Okay, F3. Anything else? Okay, I think we look good here. So we've added some extra pairs here that don't have the daily and the weekly. So once again, it's just a simple matter of going here, applying the template to the workbook, GTC Forex, and here we go. Perfect. So there they are. There's the different pairs that you want to be looking at. If you want to move these pages around, that's okay too. So for an example, if you want it alphabetical, you can take the Australian dollar here and just drag it over here and put it in the front. So you can just move these around any way you wish. Another thing that you could do to sort these pages is you go over here to this page on the right hand side, you left click that, and you go to order pages, and you can say that you want to do an alpha sort. So you hit alpha sort, hit OK, and now it's all alphabetical, which is nice. So now we've saved, let's save this workbook. Save workbook as, and let's call this one simply FOREX. Okay, so that saves our FOREX workbook. Now let's talk about which time frames are best. The best time frames really have a lot to do with how we as human beings view time. When we look at time, we often will start dividing time into fractions, in half and quarters, and so on. So what I'd like to do now is I'm going to show you a series of slides with a specific time frame on the slide. And when I show you the time frame on the slide, there's not going to be any chart. It's just going to be the words of a particular time frame. And when you see that time frame, I would like you to think about a time frame that's shorter than the one that you see on the chart. So what we're doing here is we're looking inside. I want you as an individual to think about the next lower natural time frame that you can think of based on the time frame that I show you on the chart. So remember, I'm going to show you a slide with the time frame. It's just going to be text. And when you see that text, I want you to think about the next lowest time frame, the first one that comes to your mind. If you want to take a pen and paper right now and write these results down, that can help you as well, but you don't have to. So what we're going to do, I'm just going to keep it quiet here and I'm going to show you a time frame. The next slide that I'm going to show you right now is a time frame in text. I want you to think about a time frame less than what you see on the screen. All right? Good to go? Let's do it. Okay, so 1 year. What time frame less than 1 year comes to your mind right now? Write it down if you have a piece of paper. Here's another time frame. When you see 3 months, what do you think of? What is the next lowest time frame that comes to your mind right now? Here's the next time frame. When you see 30 days or 1 month, what's the next lowest time frame that comes to your mind? Okay, let's go on to the next one. When you think of 1 week or 7 days, if you were to think of a lesser time frame than 7 days, what is that time frame? Here's the next one. When you think of 1 day or 24 hours, think of a time frame less than that. Let's look at the next one. 12 hours, half of 24. What number are you thinking of right now if you're going to a time frame less than 12 hours? 6 hours. What time frame less than 6 hours can you think of? When you see 3 hours, what time frame less than 3 hours are you thinking of right now? When you see 1 hour or 60 minutes, if you had to choose a time frame less than 1 hour, what would it be? And it doesn't have to relate to trading, it can be anything. If you have 1 hour to do something and now you need to reduce 1 hour to a shorter time frame, what number are you thinking of? Let's go to the next time frame. 30 minutes. What time frame less than 30 minutes are you thinking of right now? We only have 2 more slides here in regard to time frames. So when you see 15 minutes, if you have to choose a number less than 15 minutes, what is that number? And finally, we get to 5 minutes. Now, I don't trade anything less than 5 minutes unless you have a gimmick or you want to scalp. Then you can trade using a tick chart or a 1-minute chart. But when we look for patterns, I don't want anyone to be using anything less than 5 minutes. So what were your answers? What did you think the natural divisions were of the time frame that was on the slide? Well, let's have a look here. So first, we looked at 1 year. What's a natural division of 1 year? Well, a lot of people say a month or 3 months, a quarter of 1 year, 6 months. Usually we will either divide things or quarter them. So some of us will say 6 months and some of us will say a quarter. In business, there's Q1, Q2, there's quarters in business, and sometimes we'll take a year and divide that into quarters. So these are natural divisions. When you look at 3 months, what time frame is less than that? Well, we can't divide 3 into a number without a decimal, so in most cases, people will choose 1 month. Okay, faced with 1 month, what's the next lower time frame that you would choose if you had to divide that? 2 weeks or 1 week? Either answer is correct in the sense that a lot of people look at a month and say 2 weeks, but usually it's a 1 week division. We're quartering the month into 4 weeks. When we take the week, what do we divide that into? 3.5 days? Usually not. So we usually come up with 1 day. So 7 days in 1 week, we divide it that way. So those are natural divisions. Let's discuss time frames less than a day. If you took 24 hours and had to divide that, what numbers do you come up with? Do you half it or quarter it? I think because we have a clock that has 12 hours, 2 12-hour time frames, we'd probably divide it into 2 parts. We cut it in half, so 12 hours. And then half of 12 hours is 6. A lot of us will think that way. Or we'll quarter it, the 12-hour time frame, into quarters, which would be 3 hours. So these are time frames that we'd be thinking of using when it comes to charting. Now we can't divide 3 hours into something that's an even number. We'd have a fraction, a 1.5 hours. So now we have to go down to minutes. So 3 hours, if you had to take the next lower time frame from 3 hours, what is it? A lot of people are going to think about 1 hour. And what's a time frame less than that? Well, half of that's going to be 30 minutes. Half of that's 15. And because we're not going to have 7.5 minutes, people will say the next time frame less than that is 5 minutes. Like I mentioned, anything less than a 5-minute chart is kind of sloppy when we're looking for patterns, unless we have a gimmick and we're trying to scalp the markets. Now, I mentioned 45 minutes in the Gartley book, and this is where that comes from. If we go over here and look at 3 hours, because we can't divide 3 hours into 1.5, well, we can, but most people don't do that. They'll either jump to 1 hour, or now they'll take the 3 hours and turn it into minutes. And so what is 3 hours in minutes? That's 180 minutes. So now we can divide that. Half of that is 90 minutes, which is most movies these days seem to last about that long. And then half of that is 45 minutes, and we're not going to divide anything less than that. So that's where 45 minutes comes from. So these are the natural divisions that we all use. Do you notice that I got you to look inside yourself to find out what time frames you think of to prove it to yourself that these are the real numbers that people use? I didn't come up with these numbers. They were in you already. You're using them already in other facets of your life. And so when we look at a chart, we can only assume that most human beings are using these same time frames when they're looking at charts. Now, this might seem like a long, drawn-out process to determine which time frames are best, but we'll be revisiting this concept of taking numbers. Right now, we've been dividing and quartering time when we look at retracements and extensions and other technical analysis methods. We'll be using the same exercise to find out what the natural levels are that people look for support and resistance, and it's based on the same idea. You're going to look at a number and you're going to start cutting it in half and dividing it into quarters, and you'll find out that these support and resistance levels are very natural for us. We use them every day, and it's not just in trading. In everyday life, we're using these levels. So it's really important for us to understand which levels that people use on the time axis and the price axis, and use that information to make an educated guess as to how the composite person is going to behave in the financial markets. So does this mean I have to keep charts of every single time frame listed here? No. As we have already determined, most of the patterns that we'll find will be either on the 45, or if you prefer to use an hourly chart or a 30-minute chart, it's up to you. But we'll be able to find pretty much the same patterns, whether it be 45, 1 hour, or a daily chart or a weekly chart. So we really only have to keep 3 or 4 charts, and I just prefer to use 45 daily and weekly. So it's really up to you. Now that we know the natural divisions of time that humans prefer, let's discuss the natural divisions of price. These natural divisions are where we expect to find support and resistance going forward. By plotting horizontal lines on the white space of the future, we can identify levels of support and resistance in advance. So which divisions of price make the most sense? A lot of people prefer Fibonacci ratios. Some other people use Gann ratios. Which ones should we use? We'll discuss this in the next section entitled Fibonacci versus Gann.